Hey everybody, 4,200 remains elusive, and we're going to get into what is happening and what could actually break us out of that 4,200. We have a couple names to go over that came out with earnings tonight and discuss what they're doing. Of course, we have to discuss NVIDIA and what to expect going forward. You have earnings that will be released tomorrow. We get to look at the key levels, and we're going to talk about those key levels. IEP, its implosion, and what to expect going forward. PLTR, why this breakout could continue. UPST and its breakout ever since earnings. We have to discuss what's happening here. Also, what is happening with big tech? Is that it? And we're going to discuss if that's the end of the run or if it's not, but we're going to have to explain exactly why it's dropping and why it could drop more. Hey everybody, let's just jump right into it. So we're going to start here with the ES. 4,200, throwing it up here, 4,210, continues to be elusive. What I want to do here before we get into the intraday workings is I just want to focus on a couple key levels. So this 4060 level, you're unable to get below, right in here, right? That 4060, you're just unable to close below it, and you've been unable to close below it. What I like to point out to everybody is it's not a straight line. Everyone's expecting this breakout market like we had in 2020. The reason you had that breakout market was because the Fed injected $1.7 trillion into the stock market and into the bond market. So if you had a good 2020, you need $1.7 trillion to come into the market. Okay, I say that jokingly, but the point that I'm getting at is we're just grinding higher. And all we're doing, if you were to look at this, all we've been doing is just working off supply. That's all we're doing. We're clearing out the people that will sell at certain levels, and it looks to me like we're getting tighter and tighter. So why we have all the naysayers out there, and I'm just going to show you what I mean, why you have all the naysayers out there that are looking at this and saying, oh, well, clearly it's got to break down. I just have earnings that are beating expectations. So let's be really clear about that. Earnings for first quarter beat expectations. They were supposed to come in at negative, they came in at positive across the board. That's a big deal. Now, do we have issues? Yes, we have issues. We went over them daily. We have a debt crisis where they give us updates every 15 minutes yet do nothing, right? We have F-16s in Ukraine. China might have a new COVID variant, okay? And we're going to discuss what could happen there. Okay, NVIDIA is possibly up for sanctions. AMD is possibly up for sanctions after Micron. Okay, we don't know what's next with China. Is Apple going to have problems because of it? Okay, we have all these issues out there. 4 Fed speakers yesterday, and what did they say? Looks like rates are going higher. So despite what we think, maybe rates are going higher. We have all these issues out there, and what's happening? We're grinding along and we're going higher. Now, there is the argument that we have very weak breadth, and there is something to it. Now, I'm going to give you a really quick way to look at breadth, because people look at breadth differently. They'll look at the new highs and the new lows. I'm going to tell you why I think that's a really bad idea to look at the new highs and new lows right now. Okay, you went through a boom and bust cycle in 2000. You went through a boom and bust cycle that you have not seen like in 2020. Okay. In those 2 decades, you had more junk go public than you've ever had. The amount of SPACs, the amount of IPOs, the valuations that you're never going to see again, all of that, right? So we have to understand that those new highs and new lows, of course you're going to keep hitting new lows. You have what we refer to as ghost companies. That's not really the metric that you want to use. I'm going to give you 2 metrics that by the end of tonight, you should commit to memory and use. This is very simple. This right here, let me click this off and clean this up. This right here is the S&P stocks above the 200-day moving average. The symbol is S5TH. You can use this on TradingView and you can use it for free. A lot of other sites use this. Now, I would be using this as my long-term determination of where we stand with breadth on the market. Are stocks in the S&P above their 50? And that's what we want to say. Or are they above their 200 in this case? I'll use the 50, the 20, the 5. I use it for different periods in time. But if I look at this, what is this telling me? Okay, I'm under 50. Now, if I take this indicator and I just make it a line for a moment, okay, and then I come here and I take the S&P and we'll use the SPY, okay, you will note that all the outperformance will come from one area. And I just said all because it gets pretty glaring. So here's your demarcation line, right? If you use that demarcation line of 50, you will see that your biggest moves in the market come from once you break over 50. Your underperformance comes when you break below 50. And you can see that pretty clearly here in how you were bouncing around. Now, once you're up over, that's where you want to be. And that's what you want to focus on. And that's what I'd be using as a demarcation line. Now, I'm telling you this, and at the time that I'm telling you this, you can see very clearly that we are below that 50. This is not where I want to be as somebody that is long this market. This does not make me feel warm and fuzzy. This is a red flag. Okay, I have another red flag so that people don't think that all I do is just look at the bull scenario. I look at everything and then I make an analysis. So before I go to that, if you go here and you use this, the most important thing, I keep hearing about the breath being bad. The breath is bad. Nasdaq 100 stocks above the 200-day moving average, 65% of them are above. Okay, what area or what group of stocks do you want to be playing in? Do yourself a favor if you do nothing else with this video tonight, go make a list, okay, like I have over here of like my top names, right? You can do it on any charting system that you want. Some people use TradingView, TrendSpider. There's a myriad of them. Use the ones you're comfortable with. But create an NDX 100 list. You can get the NDX 100 anywhere. Okay, why are you buying stocks that are not in the market that have the highest breadth? It doesn't make any sense. Why would you be worried about what the S&P is doing? Which, yes, I want to look at the S&P too, but when we look at the S&P, why would I want to be buying where I'm at 47% when I could be buying at 65%? Okay, when I come here and I look, I'm still near highs. Okay, so why? Because these are the stocks that are going to drive the gross margins. So when I go out there and then compare this to the Qs, well, I get a completely different looking chart, don't I? Well, this chart makes a little more sense. Now, you could make the argument, well, you have this divergence. And you're right, it's not perfect. And it could mean that I'm going to have problems. And I'm going to show you something else that is concerning. But it's a heck of a lot better than what we were seeing before, isn't it? And if you look at the bottom line right here, and you look at the bottom line here, you remember how everybody said that was it, we're going to pinch, and we're certainly going to fall down because it's going to pinch. I think they're up to, now they're forming a diamond pattern. I'm not even going to touch that. Anyway, so what you can see here and what I think you should be focused on is, why are you playing in the market where it doesn't make any sense? You're playing in a market and you're worried about the S&P. Why? Who cares? Your job's not to beat the S&P. Your job as a trader is to make money every day. Why wouldn't you just go in the NDX? Okay, I'll give you a great example of this. We were talking about this today in the Alpha Chasers community. And the point that I was getting at, everybody's watching the market come in, and we're discussing the markets coming in. Now, mind you, the market's coming in a whopping 1% and change today after a massive double-digit run on the year. Just so we're clear on this, I want to make this point abundantly clear. If we go to January, right here, and we go to where we closed today, we are up 28% on Nasdaq futures. Okay, if we take a look at the NDX that I just went through, just to put this in perspective, here we are on the NDX 100, where we closed today, and everybody's worried. You're up 28.10% or 28.1%. Now I understand what you're saying. Oh, I don't trade off the weekly. That's fine. You don't have to. That move, just so we're going to be clear about this, guys, and guys in the general sense, because we actually have about 15% of our viewers are actually women, which is pretty high for trading, and I kind of like that. This little move's going to throw me off. This little move's going to tell me that that's the end of the market. If you didn't call this as the bottom, do yourself a huge favor. Don't call this as the top. Okay? If you weren't able to call the bottom, what makes you think you're going to call the top? Okay, the chances of you calling the bottom, okay, the only reason, if you go back and look at Twitter, why I said that this is forming as a bottom was because of a weekly positive divergence on the RSI that stood out to me as something that I didn't see in about 5 years. And I said, this looks like, you know, someone should ring a bell. That's it. Maybe it was going to hold, maybe it didn't. It held. This is where we're at now. You have a market that's trading up. Instead of sitting here, and I'm seeing this and I'm bringing it up for a reason, instead of sitting here looking at this market and having a problem with the fact that it's up, which seems to be a real issue for a lot of people, understand that you have the Nasdaq NDQ right here, 200's pointing up. Okay, I mean, that seems like it would be a good thing, right? NDX pointing up. Okay, this seems like it would be a good thing. This is what we want. Now, that does not mean that every stock is going to go up every day. Okay, so I'm going to show you a really quick way that I use as a demarcation line, and then you can use it as well. So once I'm up over 70, I watch RSI a lot. People will say, oh, it doesn't work. Okay, a tool is only as good as the carpenter that wields it. Okay, so the people that say, oh, RSI doesn't work, I would just say it doesn't work for you. And that's okay. It doesn't mean that it's a tool that you have to use. I'll keep using it. I'm just fine using it. But what I always look for is I want to see where I'm at, and then I want to see how I acted there. Okay, so at that level, I pulled back, okay, went under, tested the 50. Okay, so I can expect up here that I could have some kind of pullback once I get over that 70 line. That could happen. I have to understand that I am grossly overbought here on tech. Grossly. If I look at Google, that is grossly overbought. If I take a look at Microsoft, I have to accept that I am grossly overbought if I'm over the 70 line. Okay, that means I can come back down and work it off. And we're starting to already. And I think people are missing that. So if you're more of a swing trader, one of the things you want to do is start looking at these levels on an hourly, right? And you can see how you're cracking here. So on the hourly, we've already worked it off. We've already worked it off. If we start getting down here on the hourly, well, we're going to have to start paying attention to it, because that's usually, if you're going out a week or two, not the worst spot in the world to get involved, is it? Okay, so that's definitely something that we should be paying attention to. Now, it doesn't matter which one of them it is. It doesn't matter, okay? But if you start drilling into them, let's clean this off. If you start drilling into them, you're going to see the same thing over and over again. Popped over, cut under the 70. What happened? We worked it off, came down, popped over, worked it off. Here we are. Drill into the hourly on this, okay? So when you start to see this kind of stuff, it's worth paying attention to, okay? So big tech can come in. That does not mean the move's over. It just means it's taking a rest. Again, you're not in an environment where they're putting $1.7 trillion into the market. So you need buyers. Those buyers are going to be institutional. Here's a trade I did that did not work. Okay, and I'm going to just walk you through it. This was classic. This was a classic trade that should have worked, and it might work in a little bit here. I'll walk you through what I'm watching in a moment. But I flipped, right? And it looks to me like I was going to form a bullish engulfing right here, and then it just faded and took out the low. That was it. Trade's busted. Right here, trade's busted, and then you can see what happens today. Now, what's interesting about this trade is here we are, right? So I might hold this level right here, 350, and we're seeing this, right? I'll show you a trade that I did off a very similar pattern that this is setting up. This is setting up a pattern that I trade. I trade patterns. They work for me. So you see how you're over and now you're under, right? My hope was that I just could catch more froth, like catch some of this, then the pullback wouldn't have been so bad, maybe get another pump. That's not what happened. Okay, why did this happen? Because where we're at, drill into the hourly. Okay, we're already the overbought up in here. We already worked it off. We already worked it off. And I think that people need to go through these names and start seeing on the hourly basis where you're at. Okay, and then are you going to be able to work that off? And what's that going to look like? And if you start getting into this when you're up here in the 90 on an hourly, and it looks like you're going to push, that could have kept going today. It didn't. Now it cracked. Okay, so you have to watch that open level on Tesla. Okay, that's your level. That's your demarcation line right now. And we're already below it tonight. You can already see that, but watch that level. Okay, that's your demarcation line right from here, and we should not have broken that. Okay, 186.19. Now, I will say this: if you're shorting or buying options, you're having a heck of a day because nothing's really breaking, and you're going into NVIDIA tomorrow night. I have no idea how earnings are going to be. I would tell you right now, the bet for me is that we're up 30 or down 30. That's where we're at. I'm leaning towards the long side. I'm playing it through AMD calls. AMD's acting excellent, in my opinion. That's just how I view it. I think that AMD's acting very, very well. A new higher high today. Then we pulled back with the rest of the market. But at the end of the day, I still have a green day with the Nasdaq getting crushed. Okay, there's only a couple really big semis that did that. The other one was AVGO that hit all-time highs today. Okay, and again, take one thing from this video, go out there and create a list of NDX 100. But let's talk about some of these other names and what's going on. So I talked about this yesterday, IEP and this crack. Once you crack, that was it. Then you could see the follow through and then the lower low. Now, is that going to be the washout? I don't know, guys. I really don't know. Okay, I would be watching that level very, very carefully. I'm going to take this out. I would be watching this level very carefully and seeing what happens in here. Okay, 28.40. I wouldn't even think of buying it. Think of it until I can get over that 28.40. Okay, that would be the level that I would be paying attention to more than anything. Now, I'm going to point something else out that does not happen in markets that tend to go down. Software companies do not come out, beat expectations, and raise guidance. PANW did exactly that tonight. It's up $10. Okay, what I'd be watching tomorrow, I'd be watching that 203.50 level. That came out, beat expectations, and raised guidance. Let's talk about INTU. Okay, had decent numbers, didn't really raise guidance, didn't really knock the cover off the ball on the rev side, and this is what you're dealing with. Now, see the revs missed, earnings and cost cutting worked. So where does this put us? Well, this puts us in a position where companies are being rewarded. Now, this kind of made me nervous because ZM I played last night, I thought it was a good quarter. I really did. And it doesn't matter what I think because the market told me that they don't think it's a good quarter, right? Price pays, everything else is conversation. So you can kind of see where we're going with this, right? So now what we have to do is we have to get through tomorrow. You have to get through NVIDIA's earnings, okay, Wednesday. You have Fed minutes tomorrow, and that should be lovely, 2 o'clock, okay? And here's where you are with snow, all right? And then you have snow tomorrow night as well. Tomorrow night will be extremely active in the market. Keep that in mind. Hope you found this helpful. Any questions, as always, read out and comment on these videos because I'm making them way more specific with actual ideas that you can utilize the next day. So I'm really interested in what you think of that. And I do want to say something because there were two things that I did want to bring up now that I'm thinking about it. I did want to bring up this XLF. You are starting to hang in here. This XLF is starting to hang in here. This KRE, look at this. You're starting to hang in here. Now, I don't expect to break this on the first time, but let's go back and take a look at this in the weekly. We went over this on Saturday's video. Watch that level, okay? Watch that level. And I wish I went over this sooner, but I just looked at my notes. This DPST, if you are a long-term player, something like this, using that low, this is really interesting if you have that kind of patience. I did this with LABU last June. I'm still in a partial. Bought it down, where was it? It's over here somewhere, right around here. Bought this little flip. Still in the trade, and I'm up $3 from where I got in at. But I like it, and I did fairly well with it. Got all the way up to $12, $13. Should open this up a little bit so you can see what I'm looking at. So I bought down here, flipped that little doji, did the undercut, made you think, did a little shake and bake. Pops over, 1, 2, 3, boom, 1, 2, 3, boom. If you're in the Alpha Chasers community, you'll recognize that pattern. Pretty clear right there, and then that break. So these are things that you want to pay attention to. This has that potential. This has that potential. See it? See how you're making that higher high? Now, I don't know how we finish on the week. I don't know if we lose another bank. I mean, I really don't know. I got asked about PACW repeatedly. I have no idea. Okay, I mean, maybe them selling $2 billion of loans at a discount, because you know they had to sell them at a discount. Maybe it's enough to keep them in business for a year. Maybe they cut rates by then, and maybe based upon that, that the stock will go higher. I would believe that more if their preferred started trading over $16. Right now, that preferred is trading at about a 16 or 17% yield. And that is not something that makes a whole heck of a lot of sense to me. Have a good night, everybody.